All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Thanks for joining us here today. Just going to do a little Trader Minute update here today. Many have requested, hey, what's going on? What's happening here? And so let's get to it here. There are looking over the sign up list. There are some of you whose names I recognize, and great to have you. There are some, though, that this might be your first time here to Trader Minute. Welcome. My name is Jeff Yady. I'm the lead trader and founder here at Trader Minute. Created the 100K Challenge, former fund manager, love trading, passion for economics and option trading, discussing it, trading it, and it's what drives me. In many ways, you could call me a little bit of a trade junkie, but today let's go out and take a look at what makes those things that make Trader Minute click and what's going on with them right now. Okay, so we'll talk about the market vibe, the community challenge, the 100K challenge. Okay, we'll talk about a little tweak to the 100K challenge that I announced to our membership community here today that I'm excited about, and then we'll take a look at a little bit of training schedule that we have on tap here over the next several weeks. Now, before we go any further, I was asked by two of you whether or not I would bring back the 30-day trial for Trader Minute. For several years, we offered a 30-day trial. Come in, check us out, and if you like what you like or like what you see, stay with us. If not, hey, best success there to you. We haven't had the 30-day trial on for quite a while now, since August of last year. And yes, in a very limited capacity, tonight it does activate to where the 30-day trial is active for those that would like to take advantage of it. All you have to do is put in MAR8 at the checkout, and you can get access to Trader Minute for 30 days, free of any charge there, and check us out here for yourself. Again, it's limited seating, so I'm not sure how long it'll be. It'll just kind of depend on the response there, but I don't expect it to be up here for too many days, here. All right, so that's out of the way. Let's go take a look at what things are going on. We did something to kick off this year that was a little bit different. We run this community challenge here at Trader Minute where our members get a chance to go out and make trades. They put their trades in the chat system and, their entry, their exit. Michelle goes out, verifies it all. Some do paper account, some do real account, but, Michelle verifies that the fill prices are either happened or are realistic, there. And we had some really good trading happen. Martin, Dan, Poway, Pug, LB, AA. We had more people end with gains than we had ever seen in any community challenge, and some of them very strong. Now, the top three from this community challenge joined another trader by the name of Sonny, and they competed in a 2-week playoff where with this first round, they started with 5,000, and it was their job to go as high as they could. For the playoff, they started with 2,000. And for 2 weeks. Now, doing a smaller amount of money becomes more difficult. Your margin for error is a lot less, right? But Poway Pug. And I know some of you, know Poway Pug from chat before. Poway Pug is strongly in the lead here in first place, having almost tripled his money at a time where most traders are getting spit out and churned by all the kind of flat in the market, this kind of lack of volatility, compressing the value of options down. And, Poway Pug's had a few losses, but, he made a great trade on Exxon. USCR treated him very well, and then it's kind of been grinding around, with things since. And so, Poway, I know you might be out there, but congratulations and very nice work there. Now, on Monday, we're going to kick off the next community challenge. And, anyone's invited to join and to participate. The rules are on the website on Trader Minute. But this Monday, we're going to start off community challenge members. They start with $5,000. Again, paper or real money. Unlimited trades. You can do as many as you'd like, but all trades have to be either calls or puts, long calls or long puts. The top 3 in the group stage this time will make it to the playoffs. And the playoffs, though, instead of having 2,000 to work with, I'm going to have 1,000 to work with, which is going to make it even harder than 2,000 is. And then I'm going to do something I've never done before. I'm going to step in and compete in the community challenge with those top 3. And the winner of that community challenge will basically get a lifetime membership here to Trader Minute, which is something we've never done either. As I was talking with Michelle about the incentive and prize and everything else, and we were talking about it in our community a little bit. This was kind of tossed around. I said, well, no. I mean, if we're going to give away this, then I want a chance to defend it. So I'll join in there for the 3-week playoff for the community challenge, and looking forward to that. Poway Pug was talking a little smack with me here today, ready for a showdown. So certainly looking forward to that. So that's what's going on with the community challenge here at Trader Minute. A lot of really good members doing some really great stuff, and we commend them for that. Now, here at Trader Minute, we also have, what's called the market vibe. And the market vibe was, it derived from something I used as a fund manager, and derived as a way for me to be able to speak to the market on a consistent basis to our community. Okay, there's stuff going on all the time in the market. Well, where are the major changes happening? Right? Not what's going to happen tomorrow. I don't have a crystal ball. Nobody does. But where are we seeing some major changes, some major divergences, some major action to where, okay, something is changing? Because, no matter what, we go out in the media, we're going to see either Dow's going to 1 million or Dow's going to 0. There's a lot of hype. There's a lot of hyperbole when it comes to the market. Not all of it's correct, but what is going on the market internals, and what does that mean for the implications going forward? And, this is published every single day and, put out on our TM Vibe newsletter, and really has been phenomenal in terms of, calling the market and really being bullish on the upward trends and bearish on the downward moves and neutral when nothing's really going on. It doesn't call every little move, but the major moves in this market, the investor type moves in this market, it continues to track phenomenally. Right now there's a lot of talk about major pullback in the market and things could be in trouble and everything else. And we've seen a little weakness in the market vibe in the internals. We've seen it kind of that weakness picking up, and we could be a day or two away from a full-blown bear signal, but we're not there yet. We're not there yet. And, it's something where it doesn't mean certain sectors aren't bearish or certain sectors aren't bullish, but in terms of the overall market, from just an investor long-term standpoint, the market vibe continues to be bullish and continues to just show, hey, there's not a lot of warning signs out there, to say, hey, things are, in major trouble from what is going on in terms of price action in the market, and what, most importantly, the money flows in the market are really looking like. So market vibe continues to run strong, continues to track really well, and something that we expect to continue going forward. Now, the 100K challenge. 100K challenge is kind of the bread and butter, obviously, here at Trader Minute. And, the 100K challenge, we take $3,000. We try to roll that up as high as far as we can, looking for that 100K mark, which, I've hit 2 times before in the past. Worst case scenario, we go to 0. Okay. And the 100K challenge, it has a lot of ebb and flow and, everything else, there to it. This isn't a day trade type thing or anything like that. But the new challenge launched a few weeks ago, and we've only had 4 trades since it launched. We launched the new 100K challenge using Katy Signals, which is, Katy is essentially our name for a trend recognition algorithm. And, Katy Signals have been phenomenal. They've done a good job of recognizing trends, but as this new challenge has kicked off, we've not seen a lot of things push into any kind of major trends. Some of the pullbacks have just been kind of minor pullbacks, and some of the upticks have just really been nominal. Across the board there. So we haven't had a lot of trades to be able to make. Right now we have some Baba and some Disney and some American Airlines, that we're in, but really haven't had a ton there. We're still running with those, and great. The whole idea here is ultimately for the 100K challenge to be automated to a degree, right? So where I'm not having to lead each and every challenge, and to where there's a consistency of methodology to each of the trades. But I am making a little bit of a small tweak here to the current challenge. I'm adding a little bit of funds. Okay, and from my pocket, adding it into the trading account for a single purpose. And that is to have some fun with it, right? The challenge will continue. It'll run with the Katy triggers and the Katy signals as they come in, and it'll keep tracking there with it. But going to take a small amount, put it in, and today I got into a little bit of Apple this morning on the open, some weekly calls, and pulled a nice gain out of it. Got into some XLE calls, and they reversed, took a real small loss on it. But I'm constantly trading throughout the day, and I have found that I don't really get a lot of pleasure in making a nice trade, and great, because the reality is it's our members, it's our community, that should have that success. And so I'm bowing to a little bit of pressure here, and going to add some of those trades, into it, albeit a very small amount. The challenge will still continue to be run with Katy, but little more active involvement, perception, here from me. And again, those of you who are running with it, can feel free to run with it or not, going, with each and every trade. Those trades, the individual trades, obviously they'll be sent out via tweet, email, text, the way we normally, send out each and every trade. Let me show you here the basis for some of these trades. And let me kill the PowerPoints here, and let's come into let's just come into Disney. All right, so here's Disney. Disney had Investor Day here today, or Analyst Day here today, as they call it. But here's Disney, and Disney gave some price action right back here that would suggest that Disney's path is higher, and that its possibility of moving into a strong trend is elevated. Okay, which is what a Katy signal essentially is looking for. It's not telling me what Disney's going to do tomorrow or anything like that. It's looking for something very specific in each and every stock to say, look, there is a strong potential of a major trend developing here, whether that be to the upside or to the downside. The signal is predicated upon a very, very simple concept. And I'm going to take off the candlesticks of the chart here, and I'm just going to change this to invisible. Okay? And I'm going to take off the 20-day moving average. I'm going to take off MACD. And here we just have a red line and a blue line here on our chart. Well, the red line is essentially just the simple 7-day moving average. What's the close or the closing price of the stock? What's the last 7 days closing prices? What's the average of that? And boom, there's that red line. The blue line is a 3-day moving average. So the same thing, just a little shorter term there, okay? And moving averages have this principle with them. And, you know, a lot of people like to use moving averages for different reasons. But when you look technically at what some of the trends and what some of the tendencies are around moving averages, there's a couple key things. And the premise that Katie's built on is the idea that when a smaller moving average rises above a larger moving average, the stock tends to go higher. For example, here we are, right back here. Our 3-day moving average, our blue line, pushes above our 7-day moving average, our red line. And what starts to happen? Well, the stock appreciates in value. The stock goes up. I know we don't have the candles, but we can see it in the moving averages. You know, the stock keeps going up. Well, what happens when the 3-day crosses down below the 7-day? Like back here in May. What tends to happen to the stock? Well, it tends to go down, right? And while not all 3-day and 7-day moving average crossovers are going to be big trends, it's a really nice place to start when looking for trends, okay? Because we don't see a big trend develop without a 3-7 crossover. It doesn't happen. You know, any big trend, you can go back and you can see that it started with some sort of 3-7 crossover. So the challenge with Katie is to sift it out, is to sort it out and say, what's the difference between this signal and this signal and this signal and this signal? And which one's more likely to have a big trend and which one's more likely to just kind of go flat, right? And so the algorithm sorts it out, uses past data on the stock to look at, okay, what is the higher probability here? Is it a higher probability to make a strong move higher, or is it a higher probability to go flat and consolidate? Okay, which is kind of a 4-letter word for option traders who are trading long, right? But here's Disney. Disney triggered 3-7 crossover right here. Okay, the way the algorithm triggered, it said, okay, chances are great that there's a trend. Gave us a stop level, gave us a price target level, and right now, it's still on its way. Here with Katie. Now, when you apply an option, waiting time, obviously there's time decay depending on which option you apply. But, right now we're in some calls on Katie, looking for that price target to be fulfilled in that 3-7 crossover action, to have that follow through trend associated with it. We're also in another one, Alibaba. Now, Alibaba gave us a buy signal, right back here with the 3-7 crossover and said, hey, chances are that this thing trends nicely here. Okay. Now it went up, hit 104, dipped back. We ended up taking some of the position off taking half the position off on a little spike higher. Now it's pulled back here just a little bit, but you'll notice today getting another 3-7 crossover. It doesn't qualify as a new Katie trigger, but that same principle coming into play. And so, yes, any stock, Baba, it could tank, right? We know that it's the market, anything can happen. But what's the probability? What's the tendency? Well, the tendency is to have a stronger move higher. And so the whole premise behind Katie with the 100K challenge is to get us into trades where the chance of a trend is elevated. And, that's what we're running with here with the challenge. Now, with the small tweak, I'm not necessarily going to stay with that. I'll be looking at bounces and things like that. In fact, tomorrow, if I get a chance, I'm going to go out and buy some Vale. I'm going to go buy some calls on Vale. Now, Vale is a Brazilian steel company, and it's a company whose fundamentals I like very much, but became a little overextended up here. I had some earnings reaction to the downside, and we've seen the entire sector pull back. I've been watching the pullback, and I don't have a Katie signal saying, "Oh, big trend to the upside coming." But we're now in an area where it suggests that we will likely see some sort of bounce come into play. And I expect that bounce to be up to $10. Okay, so in the morning, what will I be looking at? I'll be looking at the price action, looking at the option prices. Do I get a chance to play Vale short-term weekly call options back here to the $10 mark? I'm not sure if it'll materialize. So far things are setting up pretty well, but in the morning we'll see where it opens. I would prefer it open up down 10, 15, 20 cents and be able to get in there and look for that move back here to the $10 mark. So we'll be adding a little bit of that to the 100K challenge. Okay. So that's kind of the nuts and bolts of the ongoing Trader Minute activities, the market vibe, the community challenge, the 100K challenge, and how they're moving on right now. On Tuesday of next week, in fact, some of you were part of our Option Basic series. We did it. We did it on our on our kind of Trader Minute landing page there that kind of gives some updates on different things going on. But we did a little bit of an Option Basics course talking about the basics of calls and puts and whatnot there. Starting Tuesday on Trader Minute during market hours, we're going to go and break down 5 elements of option trading and really go into depth. On Tuesday, we'll start with implied volatility, really digging into what exactly is implied volatility and how it affects options. How it moves, how it changes, and what type of option players it benefits. Because as we go forward, implied volatility is going to affect every aspect of options. Then we're going to take a look at covered positions, things like covered calls, protective puts, those types of things with using options in their most common way, which is to protect a major stock position or to hedge a major stock position. Then we'll get into vertical spreads, credit spreads, debit spreads, condors, those types of things. When is the time and the place to get into those? And I'll go out and get into some, here in the real-time market. Then we're going to break down calendar spreads and diagonal spreads. What are their pros? What are their cons? When is it, ideal to use it? What does the book say? What do traders actually do? Which can be a very different thing. And then the final class will be on reading option action. Today in the world, it's very popular to say, oh, look at all the call activity over here. Look at all the put activity over here. But if you follow that a little bit, you'll notice that, oh, wait, a whole bunch of call activity here on this stock, and, all it's doing is going down. Or major put activity, and, all the stock's doing is going up. How can we tell what option activity is actually significant, what's insignificant, and which ones are playable, and how do you play it? Because a lot of times when you go look at where a lot of the heavy option action is, by the time you see it and you're there, the option price has gone up tremendously. And if you're buying in, you're buying it at a severely inflated price. So what's the best way to go about analyzing and then profiting from reading the option action here? So anyway, that's upcoming here on Trader Minutes starting on Tuesday. So tomorrow we'll continue with the 100K challenge. If you hop in, if you want to hop into the challenge right now, you're still in the early stages to join on and jump in, and you're more than welcome to join us. And then on Monday we will have the new community challenge kickoff. We have many saying that they're ready to follow Poway. Not sure how Poway feels about it, but I know he's prime pumped and geared to get started here. And then on Tuesday we'll start kicking off with the options training schedule. Okay. I promised I wouldn't take much of your time here today, but before I hop off, I want to show you something that's happened in the market here today. We haven't had a lot of things go on in the market where you go, wow, this is a major change. This is something that's dynamic. This is something that's different that's happening. Most things have just been nodding back and forth, waiting for the economic data. But today we had a move in oil that was pretty dramatic. Oil prices moved down almost 6%. And if we take a look here at the USO, which is the oil ETF, you can see that oil has, dropped out of this kind of 3-month range. Now, volatility in oil is not uncommon. In fact, volatility in oil has been the norm for many years. What's been uncommon is this kind of flat, tight, go nowhere type action in oil. So a little resumption back to the norm, would be, pretty nice for many traders. But today, big breakdown. Why did it break down? Well, some are arguing that it's because of China and China's data last night showing that they imported 0.1% less oil last month or last quarter. Okay, fine, maybe. Some are arguing the oil inventory report, which, okay, yeah, decent argument. But the reality is that once the price action started to roll, it just continued to roll. And that's, very typical of oil. But I'm going to bring over a chart here. And this chart right here shows the crude oil speculative net positions. Okay, when it comes to commodities trading, there's some speculative action that goes on. And here we can see what those speculative positions are. They're released by the CFTC every single week, and we'll get the next release here on Friday. All right. So where are we in terms of speculators on oil? Well, over the last several weeks, oil speculation has hit all-time highs. Okay, and it didn't start over the last several weeks. In fact, if I come back here to the max data, you can see what I mean. Here's oil speculation on the upside. Higher than ever in the 90s, 2000s, 05, 08, 07, higher than 2010, 2011, and even higher than 2014 when oil prices topped out. The speculative long positions have been incredibly imbalanced. What does that mean? What's the impact? Well, it simply means that there's a lot to be unwound here. If you think about a short squeeze in the market, where you have a whole bunch of investors betting on a stock going down, and then that stock has some good news, what do those short sellers have to do? They have to cash out, which means they're buying into the stock, which means they're pushing the stock higher. This is just the opposite. What's happening? Now oil drops. They're leveraged into these positions, right? Well, if they have to start unwinding due to margin calls and other elements, what starts to happen? Well, you start to get a long squeeze, essentially, where the speculative positions get unwound, and you get some kind of rolling downhill of the price action in oil. And today, the price action looked very typical of a unwind of net positions or speculative positions to the upside. And I expect that when we see the data on Friday, it will reflect that. What catalyzed it? Was it A, B, C, D, E? Yes, we could theorize on that all we want. But the reality is there's a lot to unwind here. Okay, that's kind of the bearish case for oil. and the bearish case for energy names. But there is an interesting bullish case. Okay, and I'm just going to come back to our charts, and I'm just going to put in the energy sector. Okay, the XLE, and this has Exxon and Chevron and Halliburton and all of those associated to it. And I'm going to come in. I'm going to put a simple moving average here of 200 days, long term. Long-term moving average that investors will look at. And let's just come here over 5 years. We had something very interesting happen today. Here in 2014, this is the last time we saw oil specs hit high. And you can see what the unwind did. But we broke the 200-day moving average. Prior, the 200-day moving average had acted as support. Now we broke a rising moving average, bearish action. Okay. We fall, we come on back, and we hit a falling 200-day moving average. Okay, well, that tends to act, a falling moving average tends to act as resistance. All right, we get more action. And then a year ago, all right, we recapture the 200-day moving average. And not only that, but the 200-day moving average makes a turn. It starts to rise again for the first time in a year and a half, right? Been a while. Well, in all that action and in all that, in all this price action of energy, oil, this is the first time that the energy sector has come back to test its 200-day moving average. In this case, we're talking about a rising 200-day moving average, okay? A rising 200-day moving average. So what's that mean? I mean, are we going to find support there and just go to a new high? Are we going to break on through it and, fall through the floor? Is it really that significant? Well, it's a bullish case to, some of the bearish case when it comes to oil. So how do you trade it? What's the opportunity? Well, option prices are pretty high. If you're bearish oil, right? If you're bearish oil, it's pretty easy. Just take a stock like Hess Corp, for example, right? And, here's Hess Corp, and I'm just going to come in and pull up a 1-year chart. Here's Hess Corp, and Hess Corp was consolidating here, and yesterday it broke down below 51, and okay, there it goes on its next downward trend. Great. You buy puts on Hess Corp, use 51 as your stop point, and move on, right? And let the trend work in your favor. Here we are breaking into a resumed downward trend, right? If you're bearish, lots of these setups out there in the market. If you're bullish, how do you play it? Well, if you're bullish, take a look back here on Hess Corp, where Hess Corp back here in April, May, and June, where it had this breakdown, right? I mean, it broke. I mean, it's got to go down now, right? It broke support levels. Okay, boom. Next day, back up, and boom, there it goes, right? What did we get? We had essentially what's called a bear trap. The support broke. The bears are having their day, and they're quickly reversed. Okay? If you're bullish on, there's a lot of oil stocks out there that you don't have to sit there and try to catch a falling bottom or catch a falling knife trying to find the bottom here. Take a look at these breakdown levels. Those breakdown levels get recaptured. You've got plenty more to ride. And from an option standpoint, can take extreme advantage there of that. For me, I don't have an oil position on right now, but one of the stocks that I'm watching and looking for an opportunity to be a buyer of is NOV, National Oilwell Varco. And I want to see one of two things. I want to either see that today is the low and that it gaps up a little bit tomorrow, and then I can buy it on the gap up using today's low as a stop point and make a really short-term, low-risk play. And if we do get some sort of V-shape, rebound, hey, home run, okay? But I'm not taking a lot of risk to do that. Or I want to see NOV come back down here, break below the 200-day moving average in a similar fashion to right back here. Then I'll buy some monthlies, let it go, and look for a rebound back here to this 39 level. For me, that's how I'm trading it. That's how I'm looking at it. I don't know what tomorrow's going to bring, so I'm not in yet. I didn't jump in here today because I didn't like the price action enough at the close to say, hey, you know what, I'm ready to stake my claim in. There's still too many indications saying that we could come down here in this 35 and a half area. and I want to be ready to be a buyer there. He said, well, why don't you short it down to there? Yep, I could have, but I'm a little more bullish on oil long term due to the economic data, but I also understand the massive risk that's out there. So I'm going to be very calculating and very, very selective with the entry that I choose. If you want to, see me trade it or Vale, hopefully I'll be doing that in the next several days here on the live trade seat. You're welcome. Come and join us there. Alrighty, great. Any questions that you might have, please feel free to shoot them over to me, Jeff at Trader Minute. Happy to help you out there, or check us out on chat there, at Trader Minute. Like I mentioned earlier, and let me go back to it a little bit more here. Let me get the slide back up here, but. Here we go. But if you want to come join us here for 30 days, check us out for yourself. Again, at checkout on the Trader Minute page, if you just go ahead, check out, put in the code MAR8, so March 8th today, then it will zero out all the fees and allow you to access our community. You'll get full access to all the emails, text, the live trade seat, and then the whole video library, past trades, everything will be open to you upon that. Thanks for joining us here today. I wish you great success in your trading journey. If there's anything we can do to help you out, please let us know, and we'll talk to you later. Take care.